You want to pass a prop firm challenge and be finally a funded trader? The most important thing to pass a prop firm account is risk management. So in this video, we're gonna see how to properly manage your risk to pass a funded account without breaching any rules. So first of all, as you can see right here, I'm in a trade on my 4Traders Trade Locker 100k prop firm challenge, and we are right now tagged in this limit right here. But you might notice something interesting is that if I click on it, you will see that my stop loss is only -2, 4, and 7. So I only risk a 0.25% stop loss. So now you will tell me, but this is such a small stop loss. You know, people are usually risking 2% on the first trade or even 1% on the first trade. But this is actually wrong. If you want to pass a prop firm challenge efficiently, you need to manage your risk efficiently too. So we'll see how this trade will develop right here. But for now, let's go on TradingView and I'm gonna show you something interesting. So first things first, you know that prop firm challenges have a maximum daily drawdown and a maximum overall drawdown that you cannot breach. If not, you'll lose your challenge, right? In most of the cases, it's between 10% and 8% maximum drawdown. So let's say your maximum drawdown, as on 4Traders, the maximum is 8%, the basic one. So if you risk only 1% per trade, you only have 8% that you can risk before breaching your challenge if all of the trades consecutively will lose. And a losing streak can happen to everyone. So basically, if you straight away use 1% risk every single time on your challenge, you only have 8 tries and then you lose the challenge. This is why we have a way better way of managing risk and keeping the account active more longer. So first of all, I personally don't recommend you to risk more than 1% per trade. This is the first things first. And it's even better if you switch your 1% risk to between 0.5 and 0.75. Because why you're doing this, it's to make your account active longer and having less chances of breaching your account fast. So for example, if you risk 0.5% per trade and you have an 8% maximum drawdown, you have 16 tries losing streaks before basically losing the challenge, right? And if, for example, you use 0.75, you still have more. So basically something in middle. So you have 12 trades that can lose in a row before losing your challenge. And actually, if you have a good strategy, this shouldn't happen. Okay, 12 trades in a row, 16 trades in a row shouldn't really happen if you have a good strategy. But again, 8 trades in a row can happen to everyone because we cannot control fully the market. So first things first, how to pass a prop firm account is to use a smaller risk per trade. Now, let's do another example. So we know that this is, for example, the timeline. This is the plus 8% target. This is the 0% where you start your challenge. And this is the minus 8% maximum drawdown. We have as well a 4% right here that is basically the daily maximum drawdown. So same thing, if for example you open a position on 4 trades and you risk 4% on one single try, basically in one day, if it goes wrong, you can lose the challenge due to the maximum daily drawdown. Because again, if you open 4 trades with 1% each, no one and nothing can really guarantee that all trades will win, and then bam, you lose them all and minus 4%. But if you do the same thing, I don't think you will be opening 8 positions at the same time if, for example, you use a 0.5% risk. So first of all, reducing the risk as well helps you with not reaching your daily drawdown. Okay, and maybe you don't know it, but a lot of stats shows that most people are breaching their funded accounts because of the daily drawdown, and this is really due to the people that are risking way too much on a trade, like for example 2% or 1%. So this is first things first. Now this risk can be modified depending on where you are. So if, for example, right here, let's say this is the 4% right here, and you have the plus 4% basically right here. So imagine that you are now here. So you risked your 0.5, 0.75 per trade, and now you are at plus 4%. Now you know that as your drawdown stays right here, you have a way bigger margin that you can actually play with before reaching the maximum drawdown. So this means that when you are at this point exactly right here, you can increase your risk by a little bit to pass the challenge faster. So for example, you can use 1% at that point, because now instead of only risking 8% before losing the challenge, you have actually 8 plus 4. So you have 12 tries before breaching the challenge. But this goes the same way for the opposite direction. So if, for example, now you're not plus 4, but now you are instead in the minus 4 right here, so you're now there, now you should reduce the risk, because if you're reducing the risk right here, you have even more chances to keep the challenge awake, so alive basically, before breaching your maximum drawdown. And this goes for in between. Here basically you use your normal risk, and here you can increase, and here basically you reduce. That way every single time you are away from the maximum drawdown, and this is how you can keep your challenge awake longer, and this is how you can avoid breaching multiple prop firm challenges. Of course, the risk is manageable, and of course the risk can modify from a strategy to another, but for all strategies, this is the universal method on how to properly use your risk management. And of course, this is not infallible, but this is the safest choice on how to pass well a prop firm challenge. Now you will tell me, okay, but how can I properly calculate my risk exactly right here depending on my account size? So first things first, if you use Trade Locker exactly right here, you have directly a risk calculator assistant on the right. So if, for example, I go right here and I want to open a position, let's say on GPUSD, so bam, let's see what happens. So right here, you know, on the right on Trade Locker, you have directly a risk calculator, and Trade Locker is one of the platforms that the prop firm for traders is offering. So this is actually perfect for you to calculate your risk. So first things first, you need to choose the pair that you want to trade, and let's say I want to trade GPUSD. Okay, I want a market execution, and here I have a buy or sell. So let's say, for example, I want to buy. It's just an example. Okay, so I can automatically place my stop loss. So for example, let's say I want to place my stop loss here and automatically place my take profit. So let's say it's here. It's just an example, guys. Okay. And as you can see, when I click on stop loss and take profit, in the bottom right here, I have a risk case. So I have a size, risk, and a little check button. So if I click on it, this will be available. And right here you have a percentage. So basically what you can do is to click it and then place the percentage you want to risk for this trade. And as you can see, automatically the risk is calculating. And if, for example, I move my stop loss, look what happens with the lot size exactly right here. You see it automatically adjusts. So every single time, no matter where I place my stop loss, I will always have the risk I checked right here. Because if you move your stop loss, of course, your lot size right here will change. So this is how to properly calculate your risk directly just by placing your stop loss and take profit and checking this icon right here. You will be able to just calculate your risk like this. So if you want 0.5, you put 0.5. If you want 1% risk, you put 1% or 2% and bam. But of course, like I said, stick between 0.5 and 0.75 at the beginning. Then, if you're not trading on Trade Locker, if for example you trade on another platform, you can always as well go right here on Google and write babypips.com, right? So babypips.com, and you will go and click on next. So let's see what happens. And then bam, you go right here and you go on tools, and you will have the position size calculator that you can click on it exactly right here, and this will appear. So basically, according to your account size and according to the currency you're trading and the pair, it will show you the lot size that you need to use. So for example, let's say my account is 100k and then I want to risk 0.5%. With my stop loss, let's say on GBP USD right here, I go right here and let's identify a stop loss. So right here the stop loss would be 200 and pretty much like 10, let's say. So let's round it up right here. So if I go back on bbpips.com and I put 210 and I click on calculate, so for the same amount of risk, this is the lot size I would need. And if I go on Trade Locker and I place exactly the same stop loss, you will see that it will be pretty much the same amount. So if I do this, but 0.24 and bam, 0.24 if we round up. So you see, it's exactly the same thing. This is universal, and then you can just place this standard lot on any broker, on any platform you want, and enter the trade with your exact stop loss and exact percentage. So yeah guys, this is how you can properly manage your risk and pass a prop firm challenge well without any issues to reaching your maximum drawdown or your daily drawdown. And keep in mind, don't try to pass the challenge fast, there's no need to it. It's better to take your time and trade it according to your strategy every single time with a checklist. That way you know what you're doing, your risk is consistent, and that way you can make slow progress towards your goals. So if you enjoyed this video and you found these insights helpful, don't hesitate to like this video, and if you have any questions, write them down in the comments and I'll be answering them. If not, don't hesitate to subscribe to our channel and go see our challenges on fortraders.com so you can get funded and make a living out of trading.